Yo, what is going on, guys? It's Astrofx. This is my first little quick video I kind of want to make. I kind of want to explain to you guys a powerful tool that many traders use on the daily basis, and that is the Fibonacci. So this is it right here. For those that don't know what it is, I kind of want to explain to you guys just in small details on how this pretty much works. So for an example, let's draw, I don't know, like this, right? So the way that we would use the Fibonacci is that you would put it from, let's just say, point A to point B, right? This way you're seeing the price. This would be the price pushing all the way up. You're going to put the price from here, which is the 100, point A, to point B, which is the 0. And then we're going to see the retracement on the price itself. So from here to right here, right? This is point A, point B. This is where the push happened. Now the price is starting to retrace or have a pullback. So this is where we would pretty much start utilizing the Fibonacci. So here we see that the price dropped all the way down to the 0.38, which is pretty much known for, if it rejects the 0.38 pretty heavy or has some nice price action rejection on the 0.38, it's pretty much we're gonna see a continuation to the upside or the downside, depending on how you have your Fibonacci. But in this case, we have a buy scenario. Most people use the 50 and the 62, or the 62 and the 70 as their golden zone. For me, I use the 50 and the 62. This allows for some crazy snipe trades, man. Like, let me tell you, like, you're gonna catch a lot of pips using this little quick strategy, if you want to call it. But this is how it works. So from point A to point B, this is where the price went up, then it retraced. It came here to the point, to the 50% or the 62% level, and most people would just enter in a buy here because we're on a buy scenario, and you would cut all these pips, right? It seems it's obviously easier said than done because we're using an example here. So this is where the golden zone, this is where a lot of people like to enter the market, and the 0.38, which is a strong trend and is going to keep continuing, and it's pretty much not going to drop below the 0.38. Now that I kind of got that out of the way, a quick little explanation, let me show you it on the market. So this is US30, my favorite pair, the best pair, well, in dice. But to show you guys a little example, this is live right now. It's 10:56 in the morning Eastern Standard Time. So New York push already happened. But let me show you where, in this case, where you would have utilized the Fibonacci, right? So from right here, before it had the strong push to the top side, which is here, and then this is where it started rejecting, right? It came all the way down to the golden zone and around the 70% level, but mostly within the golden zone. And then, as you can see, it's just shot up 1,666 pips, or 166 in your case if you're using a different broker. But EagleFX, Hugo's Way, Odyssey, all those brokers pretty much use the points as pips. So right here, you would say, okay, well, if you were waiting for the price to close, you wouldn't have gotten this entry. But look at here. If you look at the 1 minute time frame, you see the price went from here to here and retrace right down to the golden zone. And right here, as you can see, look at this beautiful buy. Hardly no drawdown, depending on where you on where you would put your stop loss. In my case, I always trade with a 500 pip stop loss and a 2,000 pip take profit. And then this would be my trade setup if I were to have gone on this trade. But as you can see, it came down to the golden zone, and it immediately, after making this higher low, it just started spiking up and going up and up and up and up. Even then, if you weren't looking at the 5 minute time frame, at the 1 minute, sorry, you would see that it rejected the 0.38 not once, not twice, but 3 times. So even if you would have entered, let's just say right here, you still would have had a crazy push to the upside, 136 pips or 1,300 pips, whatever you want to call it. That's just one little scenario, right? Let's just see right here. Here's another example. All right. So from right here to right here, So from right here to right here, you can see that the price rejected the 0.38. I'm telling you guys, this is not something 100% that you're gonna always use to catch thousands of pips or hundreds of pips. It's something that you're gonna utilize to add to your tools to pretty much help you identify maybe a nice entry point or whatnot. So right here, it came down, rejected the 0.38, and if you would have entered here with this beautiful price action, as you can see right here, you would be like, okay, let's enter in for this buy. You would have caught 400 pips, 40 pips, whatever you want to call it. One little example there. Let's just see another one from this point to this point. This is a good example for the 0.38 rejection too. As you can see, it flew up here. Let's just use it to this wick right here. So yeah, we use it from wick to wick, by the way. So it did a strong push, came down, rejected the 0.38 once. This, if I get this to work. Not once, twice, all these rejections, right? And then it flew up from right here to right here. You could have caught 1,100 pips, 110 pips, whatever you want to call it. Let's just see another example. Let's just say here to here. From here to here, you see that the market's trending downwards, right? It had this push to the downside, came up, rejected the 0.38 going up, and then it went inside the golden zone. If you would have put it in a sell here, you would have had some drawdown. Yeah, I always have a 500 pip stop loss, so I mean this wouldn't have hit, but you've got to caught 600 pips, 59 pips, 550 pips. Let's just say 550 pips. I'm gonna start saying like 500, 1,000, whatever the case may be. So you will see these setups a lot. Like, let me tell you, you're gonna see them quite a lot. But here's the thing, you're not gonna use this blinded just like this, because you still need to have your supply and demand, your support and resistance, your trend lines, whatever you need, your price action. This is not something that you're just gonna follow blindly. It's just a tool to help you further enhance your trading, further to spot. Maybe you're doubting, let's just say, your entry point, but then you put the Fibonacci and you're like, oh well, it's in the golden zone, or it's rejecting the 0.38. That's another confluence, you know? You're using this as a confluence type strategy. So right here you see it pushed down, came back, lower high, golden zone, and dropped. Right? I don't want you guys, and it dropped 2,500 pips, 251 pips. I don't want you guys to be thinking that you could just put this anywhere you want 24/7 and catch those movements, because you know, like, what I believe is that you should trade. I personally think that you should have one trade a day. That's enough. With good risk management, good risk reward, you're gonna be set. So let me show you. These are the trades I've taken in the last few days. I do have a VIP group which I send these out to. So you can see that I pretty much only do one trade a day. I'm really disciplined. I don't want to over trade or anything. If I have a loss, all right, well, you cut it short. At least you have risk management in play. So right here, we caught 2,000 pips, 2,000 pips, 1,900 pips, 600 pips before stopping us out at break even. So, you know, like, you still need to utilize your support, resistance, trend lines, everything you use in order to pretty much make this work, so you don't follow it blindly. Because if you follow it blindly, you know, obviously it's not gonna work the way that you would want it to work, because you're just gonna be putting the Fibonacci anywhere. You're gonna be like this, and then you're gonna be like this, you know, like, you're just gonna be placing it literally everywhere, and then that's where you're gonna jeopardize yourself as a trader. Why doesn't this want to work? You're gonna jeopardize yourself as a trader. You know, like, you don't want to be doing this and trying to spot you know, like, every push in the market. You just want to have one or two trades a day and that's enough. I mainly trade the London session because that's what I found where best works for me. I do my markups from top down, so I start with the daily, 4 hour, 1 hour, and then I look for entries at the 15 minute, and then that way I could pretty much utilize all the tools I have in my knowledge to my advantage. And right here, let me give you an example. This would have been, suppose, a bad, let's just say, let's say, because right here, from right here to right here, this would have been a pretty bad fib play, right? Because as you can see, even though it retraced to the golden zone and it dropped, about almost 500 pips, that could be good. That could be a good entry, you could say, because you're still catching a lot of pips. But you got to remember, you got to use your support resistance quarter theory. Watch this. So if we put a quarter theory here, which is something that I utilize for US30, you're going to see that it rejected it perfectly. And if we go back, you're going to see that, look how many times it rejected it. Boom, 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 boom. So when I was looking at this live, I knew that we're probably not going to keep going down. The market is going to reject this quarter theory point just like it's done in the past. Look, 1, 2, 3, 4 times. If you put your quarter theory points on your charts for US30, you're going to see this happen a lot. So, like I said, don't use the Fibonacci like crazy. Don't go mad and just be placing it everywhere you see, because you still got to remember, like, you're a trader, you know? You got to see the bigger picture. Don't just go crazy thinking that you could place this anywhere. So, that's the quick little video. I know it probably got a bit long, but that's how you kind of want to utilize the Fibonacci. I know I didn't go too deep in detail, but I kind of went all over the place, but I kind of just wanted to make this quick little video for those that want to properly use the Fibonacci and use it to their advantage while trading and have it in their arsenal, ready to catch all these pips. But that being said, hope you guys enjoyed this not short but kind of long video. I will be making more of these videos, whatever topic you guys want. Please let me know in the comment section if you guys want to have some more beginner friendly videos, or what topic you guys want me to touch on with trading, and I would gladly make this video, those videos for you guys. Thank you for watching. If you guys could comment down, show some support, leave a like, subscribe. I'll be making some more content and even better content in the future. So thank you all and have a good day.